Let's welcome now on the show Santosh Rao, Head of Research and Partner with Manhattan Venture Partners. Santosh, hi, thank you for joining us today on the show.
Morning.
We knew this was coming. We knew that sooner rather than later, a taper will come in. How do you see this? Is this something that the markets have already digested, or do you see more room for the dollar index to rally? More room for the yields as well to spike up?
Yeah, I think the signals are still crossed, and everything. There's no sure short sign that the market will go either which way, or the Fed will act one way or the other, because there's still a lot of stuff going on. I mean, a big chunk of the U.S. Markets regions are underperforming in terms of business activity. Coronavirus, the Delta virus fear is there. So I think and even the consumer confidence numbers are also coming down. So I think all that is kind of on the side that says that the Fed might stay dovish for a while longer. But on the other hand, the numbers are going up. The employment numbers are improving. The inflation is picking up. Whether it's transitory or not, and how you define that will be debatable. But definitely there is some activity there. So on both sides. But at this point, if you had to take a bet on this whole thing, I think it's pointing more and more towards tapering, beginning of the year, not right away. But Jackson Hole will be a good tell, hopefully, how the Fed is thinking. But definitely things are moving towards tapering, maybe towards the early part of next year, not immediately.
Hi, Santosh. Good morning. Last time round, when the world was going through a financial crisis, we saw how difficult it was for the central banks to actually taper, and we saw there was a QE1, QE2, QE3. Nevertheless, what we're seeing in the commodity markets, what does it signal? The very fact that commodity prices are selling off, and that's bound to impact inflation. It should help in the pickup of economic activity too.
Yes, I think commodity market is also getting hit with a lot of things going on in the rest of the world. And the China is slowing down. They're clamping down on few areas on the production. They're worried about coronavirus. So I think the demand side of the equation is going to get weak, and that's also impacting commodity prices. The dollar spike in dollar always impacts commodities, and that's also doing that. But I think one thing Chairman Powell has said, that it's not going to be an abrupt rise. It's going to be very gradual, even if they do anything. So you're not going to have the tantrums that we saw last time. So I think that fear is not there. He said he has the back. He's going to follow the data very closely. So it's going to be very methodical. But in terms of commodity prices, we'll have to see. The dollar strength is a negative, but it has more to do with the global recovery and the coronavirus, the Delta. People don't know how fast it's going to grow. Is the economy slowing down? Will it slow down? Will the whole recovery get disrupted? So all those things are still being debated, not final yet. So I think we'll have to wait and see. But in the near term, I think things are moving in the right direction. Not fast, but it definitely moving in the right direction in terms of reopening and the economy building up.
Santosh, when markets are anticipating an event, and in this case it could be tapering, some would argue and say that we knew this was coming. And when you know what was coming, price they tend to adjust. Tapering came as a shocker when it was announced, let's say a couple of years ago, because markets didn't understand the concept of tapering. In this case, markets know that if tapering comes, what would be the impact? So can I say that tapering, yes, it will happen, but financial markets will startly adjust to that before the event happens?
Absolutely, they will. And I think the bond yields, to some extent, the bond market has already sensed that. So you're seeing that anticipation very well. And don't forget also, there's so much tailwind behind this. We're going to have this huge infrastructure package behind this. So there's going to be demand there. And a lot of people coming back to work and all that. So I think things are going to improve. So I think it's going to be a very even process from here. It's not going to be disruptive, and the market is to a large extent. And Chairman Powell has pretty much said that. So he's given enough chances for the market to adjust to what he wants to do. And he said he's very data driven also. So I think it won't be as disruptive as in the past. Like you said, the market is sensing it, and the bond market pretty much says that the spreads and all that are pretty much pretty much telling you that they know what's going on.